Welcome to Veiled Wealth. Tonight, something unprecedented has happened in the financial markets, and if you're looking at the headlines, you're only seeing half the story. The date is December 23rd, 2025. For the first time in 45 years, silver has shattered the ceiling, piercing through $70 an ounce to hit $70.45. That represents a staggering 140% gain in a single year. Stay with me, because what is unfolding right now is not just a price spike. It is a systemic paradox that defies every rule of economics we have been taught. You might assume this is a simple story of scarcity driving up price. Case closed, right? But here is where reality gets strange, and frankly, suspicious. At the exact moment silver is hitting these historic highs, the COMEX commodity exchange in New York claims to be sitting on 517 million ounces of the metal. That is the highest inventory level we have seen since late 2020. This is what I need you to focus on. Record-breaking prices coinciding with record-breaking inventory. These two facts cannot logically coexist. Make no mistake, the most basic principle of supply and demand dictates that when you have abundant supply, prices drop. Yet, we are watching silver vault past its inflation-adjusted peak from 1980, while New York warehouses claim to hold more metal than they have in 5 years. Something doesn't add up. Wall Street knows it. The real question isn't why silver is expensive. The question is why it is surging when there is supposedly a mountain of it sitting in the vaults. Here at Veiled Wealth, we are going to expose the accounting trick that has masked a decade-long crisis, the three technologies draining the world's supply, and the mathematical inevitability of three-digit silver. Let me take you inside what happened earlier this month. In just the first 4 trading days of December, we witnessed an event that should make every investor pause. Traders at COMEX didn't want cash settlements, they didn't want to roll their positions, they demanded physical delivery. They called for 47.6 million ounces of actual metal. To understand why this triggered panic, you have to understand the dirty little secret of how COMEX counts its silver. They use 2 categories, eligible and registered. This distinction is the illusion. Eligible silver is metal sitting in the warehouses, yes, but it is privately owned by family offices, foreign banks, or private investors. It is essentially dead inventory, not available for delivery. Registered silver is the only number that matters. This is the pile with a warrant attached, available to anyone who demands delivery. Here's the trick. For years, the media has reported the total inventory to make the stockpile look massive. But when those December demands hit, they drained the tiny registered pile. That single event consumed 60% of all available silver in 96 hours. Analysts are calling this a vault drain emergency, a term we haven't heard since the Hunt brothers in 1980. This is panic buying dressed up in suits. Major industrial players or sovereign nations have stopped trusting the paper market. They want the real asset, and they are paying a premium to secure it. Now, if you're watching this wondering, why don't miners just dig up more silver at $70? Let me explain why that is impossible. This is where geology traps us. Silver is a freak of nature. Unlike gold, strictly mined for value, roughly 75% of the world's silver is a byproduct. Miners are digging for copper, lead, or zinc, and silver is just the accidental bonus found in the dirt. Here is why this matters. A copper mine will not double production just to get a little extra silver. Silver's supply is inelastic. The price could hit $100, and supply won't budge because the primary mines are focused on base metals. Furthermore, we are facing ore grade decline. The easy silver is gone. We used to get 15 ounces per ton of rock. Today we are lucky to get 4. For 5 consecutive years, we have consumed 820 million ounces more than we have mined. We survive by draining above-ground stockpiles. But now, those stockpiles are gone. The cupboard is bare just as demand is going vertical. We are entering a technological era where silver is irreplaceable. Consider TOPCon solar technology. These new 2025 standard panels require 50% more silver than previous models. Solar alone could consume half of global mining production by 2027. But the real dark horse, the story nobody priced in, is artificial intelligence and defense. We aren't talking about software, we're talking about the physical infrastructure of AI. Data centers and 5G towers require silver to handle massive electrical loads without overheating. Then there's the military reality. In a world of geopolitical tension, smart missiles and drones are the priority. A Tomahawk missile uses roughly 15 kilos of silver. And here's the hook. When that missile explodes, the silver is vaporized. It is gone forever. We are literally blowing up our precious metal supply while demand hits record highs. So we have a geological limit colliding with exponential demand. The market signaled this in October 2025 through deep backwardation. This happens when the cash price for immediate delivery is higher than the future price. It is the market screaming, "I don't care about next year. I need metal now." We haven't seen this level of backwardation since 1980. Traders were paying a $3 premium just to skip the line. The real price is asserting itself, and the paper price on the screen is becoming irrelevant. What happens next depends on 3 phases. Phase 1 is the panic buy, where we are now. Industrial giants like Tesla and Samsung are switching from just-in-time to just-in-case inventory, pushing us toward $85. Phase 2 is the short squeeze. Banks holding short positions face billions in losses and will be forced to buy, fueling the fire toward $120. Phase 3 is monetary rediscovery. If trust in sovereign debt continues to crumble, silver returns to its role as money, targeting $200 in inflation-adjusted terms. We are conditioned to think $70 is expensive because of recency bias. But when you look at the deficit, the collapsing ore grades, and the green energy demand, $70 isn't a bubble, it is a floor. The illusion of the 517 million ounces has been shattered. The abundance was a lie. The scarcity is the reality. Tonight, let's step back and realize that for those paying attention, the journey is just beginning. This is Veiled Wealth. Stay informed, stay engaged, stay curious.